Thank you. Good morning, everyone, and welcome to this morning's meeting. I'd like to call the meeting to order. The time is now 9:00 a.m. And Stephanie, would you please take attendance?
Of course, thank you. Good morning, everyone. Adrian Cochran will not be joining us today. Andrea Comer will also not be joining us today. Ella McKitterick,
Present.
Mike Soltis,
Present.
Holly Williams,
Present.
and Melissa Gibran will not be joining us today. We do not have a quorum.
Thank you, Stephanie. And I would like to thank members of the public for joining us this morning. Because we don't have a quorum, we're going to table item number 2 on the agenda, which was a review of the minutes, and we will move on to item number 3, which is a presentation of our audited financial statements for the fiscal year ending June 30th, 2025. And Tom and Katrina are going to walk us through a presentation of those financials.
Thank you. Good morning, everybody. As mentioned, myself and Katrina are here representing Whittlesey to go over the audit results. Who's doing the slides? Is that Katrina? You have access?
Can you see?
Yes, I see it. I just want to make sure you
That's
control
me.
it.
Yes, that's
Okay,
me.
great. Yep. So if you go to the next slide, our audit team consists of myself, Katrina as well. Lisa Wills is another partner at our firm. She does the concurring partner review. And then we have a staff associate on the job and an IT security assurance manager, Chris. He is on top of our audit. We also use specialists internally to look at IT controls, specifically around the financial systems, but also high-level controls over the organization too, just to make sure that nothing sticks out as needing attention, kind of a value-add service that we provide to our clients. The next page goes over our actual audit results. We've issued an unmodified opinion on the financial statements. That is good news. That is what you're looking for from your auditors, is the highest level of assurance that you can obtain on the financial statements. We also reported no compliance findings or significant deficiencies in internal controls over compliance. Our audits are the audit of statements, not only audit the statements, but also we have to understand and look at internal controls. And if we were aware of any findings, significant deficiencies or material weaknesses, we would report that to you. Those standards are done in accordance with government auditing standards, which is an additional level of auditing due to the status as a quasi-public entity for the state of Connecticut. As I mentioned, the IT control specialist for Whittlesey has reviewed the IT environment and general IT-related internal controls. And again, no comments there or no issues to report there to you. The next page, we'll talk about the required communications as part of the audit. Our engagement letter was dated April 18th, 2024, which discussed our responsibilities and management's responsibilities. We've performed our responsibilities under accordance with generally accepted auditing standards, and then management's done their responsibilities, which is to provide us with everything we ask for, record transactions as they occur, and make any necessary adjustments in the general ledger. Governments and the audit committee is responsible for general oversight of the organization. So everybody's done what they're supposed to do in accordance with the standards. During the year, there were 2 new accounting policies adopted by Connecticut Paid Leave. Not significant standards by any sense, but they required a little bit of work to implement into the financial statements. And we'll talk a little bit more about those, but GASB 101 and GASB 102. GASB 101 is in regard to compensated absences. That standard basically requires that anybody following GASB record compensated absences on an accrual basis, but also to make sure that any type of compensated absence has been accrued for, not only those that are expected to be paid upon separation, but also if they're expected to be used in the future. So not a significant impact, but a little bit more disclosure around that. And then number 102 is about certain risk disclosures. That basically talks about risks and constraints on the organization or concentrations. And it's pretty self-explanatory, but you're a entity set up for really a single purpose, and that disclosure just talks about what the organization can do and the limitations basically to exist. So shouldn't be any really surprises there. That does not impact any of the numbers. It's strictly a disclosure. As part of the audit, we've asked management to provide us with a representation letter, which is standard, which they have done. Like I think I said earlier, the financial statements themselves have been issued, clean reports. The most significant estimate in the financial statements is the allowance for uncollectible receivables, reserves for benefit claims, the net pension liabilities, and the net OPEB liability. So we basically do additional work around these areas where we look at the underlying assumptions, calculations. We discuss with the actuaries. We read the state reports, the state pension reports, and the OPEB, and make sure that they're not only recorded properly, but also that the assumptions and the information that goes into looking at those estimates is done without bias, and that the amounts make sense. There were no audit differences in us performing our audit, so we did not identify any misstatements in the numbers provided to us. There were no instances where we felt the numbers were misstated, but we passed on them due to materiality. So if that existed, we would report that to you. In the course of conducting the audit, there are a few adjustments that come in after we start, primarily because the data just comes in afterwards. I'll use the benefit claims reserves as one of the examples. It's not until that report is available that get made. But management's responsible for that, and they are proactive in looking at that and coming up with the adjustments, and then we'll talk about it and audit it. So there really are no audit adjustments or really any adjustments to speak about in terms of conducting the audit. If we were aware of any fraud or illegal activities, we would report that to you. Good news there's none. No surprises. I think I previously said no material weaknesses identified in internal controls. There were no disagreements with management. Your team's a great team to work with. Everybody is very accessible, and we get information timely, and the information is complete, and it is very easy to work with. Most of the audit is done, actually all the audit is done remote. I think that makes sense given your pretty much remote organization. We utilize Microsoft Teams to meet. We meet frequently with the management team to go over questions, exchange information, and just kind of have general conversations to make sure we understand where everything stands. We're not aware of any management consultations with other accountants. And then finally, for this slide, we confirm to you that we've met all the independent standards to conduct our audit. So no issues there. The next slide wraps up the required communications. The financial statements contain required supplementary information. That information is not audited by us, so we don't provide an opinion or assurance on the RSI, but we do have to read it and make sure it agrees to the financial statements. That information is the management discussion and analysis, which is the beginning part of the financial statement, and then the supplementary schedules to the pension and the net OPEB liability. So while we don't provide, like I said, an opinion or assurance on it, we do have to understand it and make sure it ties out and make sure it's consistent with the financial statements and it doesn't disagree with anything in the financial statements. So then next I'm going to turn it over to Katrina, and she'll go over more details on some of the audit areas and some of the adjustments that you may not have seen because they are more on the accrual side, accrual-based adjustments versus cash financial statements.
All right, thanks, Tom. Good morning, everyone. So this slide represents the significant audit areas and transactions that we looked at. This is not a complete list of everything we do, of course, during the audit, but these are the most significant areas. So in terms of cash and cash equivalents, we do confirm all of the balances with the financial institution to verify those balances, and we look at any bank reconciliations to test any accuracy to test the accuracy and completeness of any reconciling items. For investments, we do also confirm 100% of those balances with the financial institution or the holder of those investments. And we do test the fair value of the portfolio. The next two are really the most significant areas. So certainly contributions receivable and revenue is a very significant area. The contributions receivable, as Tom alluded, I think you guys are accustomed to seeing cash basis financials throughout the year. For the audited financial statements, they have to be recorded in accordance with generally accepted accounting principles, which is an accrual basis. That being said, so receivables are required to be recorded. For the authority, the contributions receivable represent actual cash receipts subsequent to June 30 that are related to payroll periods within our fiscal year of fiscal year 25. So during the audit, we do test those subsequent cash receipts and the assumption, and we also test the assumptions and methods used to estimate the allowance for uncollectible accounts. So again, that's a GAAP concept where if there are any receivables that there's some uncertainty if they'll be collected or not, GAAP requires that there be an allowance assigned. So we also select a sample of employers, and we do confirm the contribution directly with those employers. So we send out letters directly to the employers and have them confirm the amounts remitted during the fiscal year. One other step we perform is we do a detailed sample, and we do interact a little bit with your service provider when we're performing those tests. So we do a test of controls over a sample of the cash receipts and did not note any issues there. So benefit claims expense on the expense side is the most significant category of expense. We did perform a detailed test of controls over a sample of the benefit claims and did not note any issues. We also gained an understanding of the authority's monthly random claims quality assurance process from the team within the authority that also routinely samples and tests transactions that are being processed for quality control. We reviewed the assumptions by the authority's actuary, which is Spring, to determine the benefit claims reserve, to look at the underlying assumptions, methods, and data used to calculate that reserve. And then we agreed the reserve to the financial statements for agreement. We did actually meet with Spring representatives this year to discuss the retrospective review of the benefit reserve. So that was very beneficial for the audit process. And then finally, as Tom already mentioned, the pension liabilities are significant audit areas, the pension liability and the net OPEB liability. So we did review the actuarial assumptions used by the state of Connecticut's actuaries, and we agreed the liabilities recorded in the authority's financial statements to what's being reported on the plan audits to ensure there were proper allocation and reconciliation. We also reviewed the state auditor's reports covering the schedule of component unit allocations. That's where you're determining each quasi-governmental agency determining their allocation of the total liability. And we did review that for accuracy and completeness in the financial statements of the authority. So we just have a couple slides kind of follow up on some significant areas. So one is contributions. The contributions from participants for fiscal year 25 was 479 million, which was a 3% increase from the prior year. I talked a little bit about contributions receivable. Again, this so not cash basis. So these numbers may look a little different than the certainly the numbers you're accustomed to seeing throughout the year. So the 127 million is the contributions receivable. That's up 3%, which is consistent with the increase in revenue. I also note the allowance for uncollectibles. If you look at the allowance as a percentage of total revenue, it is fairly consistent year over year. So 5%, and then in the prior year, a small increase to 6% in the current year. And those allowances are really to offset any fund recovery efforts undertaken by the authority. We also noted the month's contributions and receivables. So the receivable balance of 127 million is roughly equivalent to about 3 months worth of revenues, and that makes sense since contributions are remitted generally on a quarterly basis. So from an analytical perspective, that makes sense. For benefit claims expense, the total benefit claims were 451 million for the year. So that was an increase of 17%. So kind of a larger increase year over year. As the public becomes more aware of the program through outreach services, it makes sense that the benefit claims would continue to increase. As we've mentioned a couple times, Spring does prepare a benefit claim reserve liability, which for fiscal 25 is 60.9 million. And that represents open claims that have outstanding payments at fiscal year end. It also represents pending claims, which are expected to be approved, and also claims incurred but not yet reported to the authority. So again, this adjustment has to do with compliance with generally accepted accounting principles. It is a significant estimate, but because of the months after, so this is as of June 30, we have the benefit of looking at subsequent activity to audit the reasonableness of this estimate. So we're comfortable with this, the 60.9 million. And then finally, Tom already mentioned a bit about technical updates on GASB 101 and 102. So those were implemented in the current year, as Tom mentioned, so I won't go into more detail on those. I do want to alert the group that for fiscal year 26, which you're in right now, there are 2 new GASB standards that have to be implemented. GASB 103 is, although it's not going to impact the day-to-day accounting, it is probably going to be a little more time consuming. So it's important to be thinking about this right now. It's going to affect how you present your management discussion and analysis, MD&A, in next year's audited financial statements. And it also is going to affect how you present like budget versus actual results, and then actual versus actual results in the audit. So we already had some discussions with management about this, but I would certainly recommend starting now to get a good understanding of this standard, since it will impact the presentation, the content and presentation of next year's audited financial statements, and most notably the MD&A section. GASB number 104 is disclosure of certain capital assets. So that one should be not as difficult to implement, but it does just require in the footnotes to the financial statements that you disclose certain types of capital assets in more detail. You have to disclose them separately in the capital assets footnote. So that includes, for example, any leases, right to use assets, any subscriptions or intangibles, or property held for sale. As of right now, probably not anticipating this to have a significant impact to the authority, but again, just something to start preparing for now for those new disclosures. So that actually concludes our presentation. I'll stop sharing. Are there any questions for Tom or myself?
And also just way of background, we met with Holly 2 weeks ago, maybe as well. So we kind of talked about, if there were any issues. We've kind of gave a brief update of this anyway. So we've had communications with Holly on this, and we'll also do this again to the board at the board level, which is upcoming as well.
Yes, thank you. And I think, it's not surprising that there's less questions when we have a clean audit from the organization. So I appreciate your review, and I appreciate the paid leave staff, their diligence and attention to detail and the management of the authority. So thank you for your time this morning, Tom and Katrina. If I don't see any other questions, then
Well, I would just like to reiterate what you said, Holly. Thanks very much. It's always, you look forward to receiving the report, and this is obviously the kind of report you like to receive. So thank you, and thank you to the authority, those involved in this. It's a terrific outcome.
absolutely. All right, I don't see any comments or questions this morning, which is always good. But again, if people think of something after, it will be presented to the full board as well. Moving on in our agenda then, Dave is going to walk us through our budget review of spending to date.
Thank you, Holly. Before I begin, I just wanted to thank Amy Stewart and Walter Hay, and especially Locke Foe, our assistant controller, for their work on the audit this year, and assisting Whittlesey for issuing the financial statements in their opinion. So thanks to them. Okay, so enough about fiscal year 2025. We're going to talk about fiscal year 2026 through September. So let me share that on the screen.
You can see your screen, Dave.
Thank you for the confirmation, Stephanie. Okay, so September. So for the results of September for our operating account, we had over a negative $976,000, which resulted in a positive variance of $334,000. The significant expenses for the month were the typical ones: payroll and related expenses, contact center, and outreach. The positive variance was mostly attributable to two things. Number one was software licenses. That's a timing difference, not a permanent difference, because there was a license that was supposed to come in September, the MuleSoft license, which we used to integrate contributions from our payroll providers into Salesforce. We didn't get that until next month, so we'll see it next month. So we'll talk more about that then. And then the other significant variance is the continued positive variance we have for payroll and related benefits. The payroll increase that we had budgeted has not happened yet, so that's one part of the variance. And also the pension rate also has a positive variance because the actual rate for that came in a little lower than we had budgeted. So those were the main significant factors. The biggest negative variance we had for October was for grievance adjudication, i.e. our appeals work done by our partners at DOL. Again, that's a timing difference because we were we had budgeted for that last month and we paid for it this month. Having said that, it still came in significantly less than we had budgeted, by about over $46,000. So that will be a positive variance we anticipate carrying forward through the rest of the fiscal year. For the first quarter, our activity, not including the redesignation transfer, which happened, was over $977,000. And to date, we have an $847,000 positive variance in the operating account. Bond activity, we didn't have any bond activity for the month of September because we didn't actually pay anything out of bonds until the first few days of October. So we'll see that next month. So that's why we had a positive variance, and we are running a year-to-date positive variance right now. But once the timing difference corrects itself, it'll be closer to zero for what we're running. So since nothing happened this month, the available bond funds we have is still at $1.3 million. Moving on to our contribution activity for the month. Our activity was over a negative $37.6 million. That did result in a negative variance for $2 million. As usual, the biggest driver is benefits paid, coming in at more than budgeted. We had over $38.5 million of benefits paid for the month. That's a weekly run rate of $9.6 million. That's actually lower than last month, which was $9.9 million. Although I will say August was somewhat of an outlier because we had an outlier week where we had our highest payment of benefits. I think it was the last week of August, and it was almost $10.3 million. The regular weekly amounts have gone down since then, since that outlier amount. And so we're averaging now about 9.6. Contributions came in at over $559,000. We had over $227,000 positive variance. Fund recovery numbers were a little less than budgeted for the month, but pretty close. Our interest income of over $2.1 million did result in a positive variance of $241,000. The interest rate, the earned interest rate we earned for the month was 4.34%. During the month, the interest rate did go down. It had been running at about 4.4, and by the end of the month, it was down to 4.25. And that's because the Feds had reduced their rate by a 0.25%. So the short-term investment fund usually follows the pattern of that. So that's why it went down. And so it's been holding steady now at about 4.25. Year to date, our activity is just under $6.3 million. There is a negative variance of $9.4 million. Again, the biggest driver of that is benefit payments. Next month, Spring will be coming for their quarterly update with an updated projection of of what we expect the activity to be for the rest of the fiscal year. So next month, we'll have an updated projection for the contribution account as well as the operating account, because we'll have 4 months of activity to analyze by that time, and we'll have updated annual projections at that time. The contribution account as of the end of September was over $592.1 million, so still in a good position. Balance sheet on a cash basis was over $597.3 million. As usual, most of that was attributable to the short-term investment fund, where most of the assets are sitting. Bond funds were at 1.3. The operating reserves were at 1.6. And oh, I don't know why that's there twice, but okay. And that's it for the month of September. So I will take any questions that anybody has at this time.
I don't see any. All right, no questions this morning. All right, well, is there any new business? Any old business? I flipped those. I should have done old first. So no old, no new. Okay. So may I have a motion to adjourn?
Move to adjourn.
Thank you. All in favor?
Aye.
Aye.
Aye. Thank you. Any Nobody's opposed. Any abstentions? No. All right. So then the motion carries. The meeting is adjourned this morning at 9:30. I hope everybody has a wonderful weekend.
Thank you, everyone.
Bye, everyone.
Thank you.